There is no set rule that says who pays what. Everything can be negotiated. Most buyers and sellers have heard of closing costs. You just know it's already a part of the deal. But here's the thing. Very few people actually understand what's inside that number. Why are you paying thousands of dollars on top of your down payment and out of your net proceeds? That's what we're going to be talking about today. I'll be breaking down what closing costs actually cover, what escrow means, and usually who pays what here in Tennessee, and an added bonus of smart ways to save money at the closing table. Hey y'all, my name is Tierra.Hensley and I am a realtor here in the Middle Tennessee area. I work with buyers, sellers, and relocation families all across Middle Tennessee. And I get it. Closing costs can feel like a black box. There's no transparency. You don't know what's going into that number. But the truth is, they're really not all that random. They're the price of making sure that your home legally becomes yours, your loan is secure, and the county recognizes you as the new owner. You can think of it like buying a car. You don't just pay for the car. You have to pay for tags, title, and registration, and sometimes a warranty. Closing costs are the house version of that. Bigger numbers, but essentially the same idea. So let's get into it. What are closing costs? Closing costs are all of the fees and prepayments associated with buying or selling a home, totally separate from your down payment. Now, your closing costs are going to fall into 4 different buckets. First off, we have lender fees. Now, lender fees is what the bank or your lender charges you to actually give you that loan. Second, we have title and settlement fees. The cost of making the home legally yours and transferring the ownership from the seller to your name. You also have government fees and taxes. Now, we all know Uncle Sam is gonna take his portion. This is what the county and state charge to record the sale of the home. And finally, you have prepaid and escrows. Now, this is money set aside for things like insurance and taxes, so you're not slammed with big bills later on. Now, we're gonna get into all 4 of these buckets a little bit deeper in just a few moments. In the state of Tennessee, closing costs typically land between 2 and 5% of the purchase price. So let's say that you're buying a house for $350,000. You should expect your closing costs to be between $7,000 and $17,000. So now we'll walk through what actually shows up on these documents as you're going through closing and break down each fee. As I stated before, there are lender fees. This is the bank's paycheck for giving you money to buy the house. In your closing statement, you will see an origination fee. This is part of your lender fees. The origination fee is pretty much the fee that they're charging you to open the file up. Next, you'll see underwriting and processing. Now, this is the fee for the team having to comb through your W-2s, pay stubs, and credit. Sometimes you may see a credit report fee. Normally this is pretty small, but it's just a fee that's charged to pull your credit report. You may also have an appraisal fee in there. That can vary between $500 and $700 here in Tennessee. And if you don't know what the appraisal is, it's just the bank's way of knowing that the home is worth what they're lending to you. So they hire an appraiser to come out and look over the home to make sure it's worth that amount. So there is a fee for that as well. Now, there are different types of loans, but if you're using FHA, you'll also see a 1.75% mortgage insurance premium fee added. Now, moving on to the second bucket of fees that you'll see, which is title fees and settlement. If you're not aware, title is the property's history. So your title search and exam is a deep dive into the property's history. The title will show whether or not there's any old liens on the house. So your title company is going to check all of that to make sure that the owner can legally sell the house to you. Your lender's title insurance. This protects the bank in case someone tries to challenge the sale of the home later on. The owner's title insurance protects you. It's optional, but most definitely highly recommended. And finally, you have your settlement and closing fee. And this is going to the title company to run the title and make sure the house is clear. and they'll run the show at closing and make sure that the money goes where it's supposed to go. Now, under your government fees and taxes, you will have a recording fee. Now, this fee is paid to the county to officially put your name on the record. Tennessee also has a transfer tax. Tennessee charges 37 cents per $100 value, or $3.70 per 1,000, same thing. So on a $300,000 home, that would be about $1,110 for that fee. Now, our final bucket, if you recall, was prepaids and escrow. And this is the one that throws people off the most. So here's a simple way of explaining it. You have your homeowner's insurance. Usually you pay your first year up front. There's also prepaid interest. So this is you covering the interest from the day you close to the first of the month. So let's say that you're closing on September 20th. You'll owe interest for September 20th through the 30th. Now you'll also have your escrow set up. This is kind of like a savings account with your lender. So each month, a little portion of your mortgage payment is going into this escrow account so that they can pay your taxes and insurance for you. At closing, they usually want a little cushion, normally around 2 to 3 months each. You can think of escrow like setting up auto pay. You're giving your lender a head start so that those big bills don't sneak up on you later. That money is going into that account every month when you're making payments. Now, for my sellers, here's your side of the sheet. You'll usually pay your portion of title and settlement fees. You have your owner's title policy if it's negotiated that way, transfer tax, HOA transfer fees, which can also be negotiated. There is no set rule that says who pays what. Everything can be negotiated. You'll also see the payoff for your mortgage and any other liens that you may have on the house. And sometimes, my sellers, you will even see credits to the buyer if we agreed to cover part of their costs to help the deal go through. So yes, both sides are paying something. That's why strong negotiations matter here in Middle Tennessee. Now, here are smart ways to help you lower your closing costs. First thing first, shop lenders. Shop at least 3. Every lender has different fees, even for the same loan programs. So one might charge $1,200 and the other might charge $1,500. Try to always get 3 quotes if you can within the same week. A bank, a mortgage broker, and a credit union. Compare them line by line. Doing this step alone can save you thousands. My second tip is ask for seller concessions. This is not uncommon. It happens every day in real estate. Depending on your loan type, FHA allows up to 6%, conventional 3 to 9, depending on your down payment, and USDA is normally around 6%. These concessions can help you cover your closing costs and prepaids. Tip number 3 for my sellers, and I've said this before, always get a pre-listing inspection. Spend a few hundred up front to fix the small things before buyers use them as leverage later on. Save yourself the headache and just get it done. This makes your house more attractive and less room for negotiations and repairs down the line. Tip number 4, lender credits versus points. There may be a scenario where you could take a higher interest rate for a lender credit to cover closing costs, or pay points up front to lower your rate long term. You most definitely should sit down with your lender and run the numbers before deciding. Tip number 5, make sure that you shop around for shoppable fees. Now, some fees are fixed and we can't change them, but title company settlement fees can vary, just like the lender fees. So make sure that you're shopping around for the best rate available. Tip number 6, if you're able to, close towards the end of the month. The later in the month that you close equates to fewer prepaid interest days that you'll have to pay. So here's the bottom line. Closing costs are just part of the process. They're not extra charges meant to surprise you. They're simply charges to make sure that the home is legally and clearly yours. In the typical sale of a home for buyers, normally you receive your closing disclosure at least 3 days before closing, so there's no surprises. And if you're relocating here, Tennessee closings are normally pretty smooth, and the title companies here handle most of that. And there's also an option for remote closings if need be. If you're thinking about buying or selling here in Middle Tennessee and closing costs are stressing you out, reach out to me directly and we can talk about it. I'd also love to be your guide. I'm here to make your move simple and stress-free. You can reach me at 931-486-4537. Let me know if you have any questions about closing costs down in the description. I'm happy to help, and thanks for watching. Y'all have a good week.